Have you ever noticed how a calm mind can really set the stage for a good night's sleep? That's the idea behind our new podcast, Good Sleep. Greg, our host from Optimal Relationships Daily, is here to help ease you into a peaceful night's rest with some positive affirmations. And these affirmations aren't just comforting. They can help ease anxiety and nurture positive thoughts, setting you up for true good sleep. So press play on Good Sleep tonight, because a good tomorrow starts with a good night's sleep. Just search for Good Sleep in your podcast app and be sure to pick the one from Optimal Living Daily. This is Optimal Finance Daily. Know Thy Investing Self by Nick Maggiulli of dollarsandData.com. And I'm your host and personal finance enthusiast, Diana Merriam. Now let's get right to it as we optimize your life. Know Thy Investing Self by Nick Maggiulli of dollarsandData.com. There's a great line that comes from George Goodman's The Money Game. Note that Goodman went by the pseudonym Adam Smith. Quote, "The first thing you have to know is yourself. A man who knows himself can step outside himself and watch his own reactions like an observer." End quote. Knowing yourself as an investor will be far more important for your long-term results than even the most perfect portfolio. Why? Investing is primarily a behavioral exercise, not an analytical one. Despite all of the data that Of Dollars and Data prides itself on displaying, behavior beats analytics in the investment world. To demonstrate the importance of this, I'm going to tell you a personal story about my history with one asset in particular, gold. I used to hold 5% of my net worth in gold, but after examining the data and questioning myself, I realized I had to get out. Why was I in gold to begin with? There is some evidence that gold can play an important role in a portfolio due to its lower correlation with equities and bonds. When the S&P 500 goes zig, gold generally goes zag. As a result, there's a small rebalancing bonus that you could have earned historically by holding some gold. However, though it plays well in a portfolio, gold is a very volatile asset by itself. The highest one-year real return for gold since 1976 is 120%, and the lowest is negative 41%. More importantly, you'll notice that gold can have long stretches of negative returns. To be exact, from 1981, it took about 32 years before gold was back at its all-time high. And that is why I had to get out of gold as a long-term investment. Can you imagine having 5% of your net worth in an asset while watching it drop by 70% in value over the course of multiple decades? I realized I could not, and I sold last week, thankfully at a profit. The fact that I've gone back and forth on gold a few times over the last few years illustrates why I shouldn't own anything this volatile. I've accepted my nature as an investor and will ignore gold as a long-term investment for the rest of my life. Rebalancing bonus be damned. Ironically, Michael Batnick, my favorite investment writer, recently put 10% of his net worth into gold as a short-term investment based on pricing trends. My decision to abandon gold could either work out in my favor or be an expensive mistake, but I'm okay with that. How to know your investing self better. The problem with trying to know your investing self is that you have so few data points to go on. Large market drawdowns happen rarely, and some investors, me included, have never experienced anything of this magnitude. Despite the difficulty in determining how you will react to a 30, 40, or 50% decline in equity markets, there are likely clues into your behavior. For example, consider the following questions. Do comments around the stock market from your friends or colleagues make you want to check your portfolio? If you lost X amount of dollars, where X is 50% of your equity allocation, would you feel okay still owning stocks? Note, this has to be done in actual money terms, not in percentage terms. Losing 50% sounds bad, but losing $500,000 sounds far worse. Always convert to dollars when thinking about losses. What kind of event would have to occur for you to sell, such as full-fledged nuclear war, super volcano eruption, etc.? This sounds extreme, but it may get you thinking about how you would feel so you can admit if you have a selling point. And are there any assets that you could never own based on their volatility? Despite all of these questions, it will still be difficult to know your investing self. Or, as Fred Schwed once said, quote, "Like all of life's rich emotional experiences, the full flavor of losing money cannot be conveyed by literature." End quote. While investing with real money may be the only way to actually understand your investment nature, I don't recommend doing anything that could ruin you financially. However, taking a small percentage of your portfolio and putting it into more volatile assets may be worth the investment, even if you incur small losses. The knowledge you gain from this exercise could save you far more in the future. Best of luck in finding your true investment self. You just listened to the post titled Know Thy Investing Self by Nick Maggiulli of dollarsandData.com, and I'll be right back with my commentary. Buy low, sell high. It's easy to say, hard to do. For example, high interest rates are crushing the real estate market right now. Demand is dropping and prices are falling, even for many of the best assets. It's no wonder the F.I.R.E flagship fund plans to go on a buying spree, expanding its billion-dollar real estate portfolio over the next few months. You can add the F.I.R.E flagship fund to your portfolio in just minutes and with as little as $10 by visiting fundrise.com/OFD. That's FUNDRISE.com/OFD. Carefully consider the investment objectives, risks, charges, and expenses of the F.I.R.E flagship fund before investing. This and other information can be found in the fund's prospectus at fundrise.com/flagship. This is a paid advertisement. I appreciated when Nick pointed out, quote, "Investing is primarily a behavioral exercise, not an analytical one." End quote. While it is important to have knowledge about investing, this knowledge should be applied within the context of what you know about yourself. I joke that I'm a lazy investor, and it's because I mostly ignore my portfolio. I have a 100% stock allocation in total market index funds. I don't have to think about rebalancing, and most of my contributions have been automated. I very rarely look at my investments, and so every time I do, I'm pleasantly surprised at the number. I also have a very long time horizon, and I don't anticipate I will touch my investments for another 30 years. I'm sure I could be optimizing and squeezing out slightly better performance if I fussed with my portfolio. And over time, I'm sure I'll make adjustments, especially as I get closer to drawing down on my portfolio. However, as strange as this sounds, I believe the pillar of my investing strategy is that I don't look at my investments. I view the money that I invest as a tax that I'm paying to my future self. It's not my money now, and I have no claim to it, so I can ignore it just as I would ignore your portfolio. It's none of my business. When people watch the roller coaster of their investments, they often talk about how they lost money when there's a market correction. And the emotions of that loss often cause them to fuss with their investment strategy. I know I would do that too if I thought of that money as mine. So I'm sticking to my ignorance is bliss strategy. And that'll do it for today. Have a great day and rest of your weekend. And I'll see you tomorrow as usual, where your optimal life awaits.